What's up, you guys, and welcome back to Cryptographics. And also, welcome Mr. Jeff Cryptokindness.
What's up, YouTube? Welcome back to the Crypto Kindness channel. And immediately we have what's up? An echo because I'm an idiot. You think I'd done this before?
Oh man. Well, everyone, welcome. I'm glad to have you today. We're gonna go off the deep end, and we're gonna start talking about in a little bit, the most important thing, in my opinion, that if you don't know this, you're really gonna pay the price. You're gonna pay someone else's pockets, and that's gonna be about liquidity. But before we get into that today, we got a whole lot to talk about. Jeff, what's going on in this ecosystem right now? What is going on?
Complete and utter insanity. So last week when we did our first podcast, we caught the TitanX Farms, I should say Titan Farms launch, and 4 days after that, it was just insane trading volumes, people making a lot of money, people making a lot of mistakes, but really it was a ton of fun. There is so much happening right now in terms of TitanX ecosystem. We're seeing a lot happening with the pTGC UFO ecosystem as well. It's really a fun time to be in both of these. My favorite observation, though, of the last week, which honestly, it felt like a month. Doesn't it feel like forever since we got together, just because so much has happened since then?
It actually does. Yeah, it's kind of wild, actually. It's only been a week, but it does feel like a month.
Yeah. Well, I mean, what are some of your biggest observations in the last 7 days?
Oh my God. Well, I mean, just watching the ecosystem. I feel like last week, because we basically we did our first stream right as the farms were launching. The biggest thing I saw was the explosion of liquidity in all the major tokens that are in the TitanX ecosystem right now. Like, that was wild. And watching the prices after that, I mean, even with 11 point something $million in liquidity, DragonX did a nice run up. Volt is on an absolute tear, and that thing has so much liquidity. And so it's been really cool to watch just the TitanX ecosystem. I mean, you've got Element 280 that just launched. I think you've got Ouroboros launching, I think, tomorrow. You've got a couple other, or another protocol. I think it's AlienX launching. There's so much happening in the TitanX ecosystem. It's mind-boggling. And then also watching the coiling spring of pTGC and UFO, and just allowing that to kind of fizzle out, do its thing, pull back a little, get a nice little healthy correction, which is not really much at all, and just waiting to see that thing rocket again. I'm really excited.
Yeah, me too. I think one of the things that's going to be really fun about these weekly calls is observations of weeks prior. Like, we're going to get a bunch of stuff right, we're going to get a bunch of stuff wrong. It is human nature. But would you please share the chart that I'm showing here?
Oh yeah.
I brought this up today and I just laughed. So this is the Volt.win, Steve DeFi's protocol. And last week, when we were on this stream together, I drew this flag following the chart. And I was like, this looks suspiciously like a bull flag that's about to rip out. And I didn't adjust anything. And look at that. It has broken free of this triangle and is just ripping up. It's at an all-time high right now, Volt being 3.8 cents. And what'll be interesting to see in the future, I don't think this happens quickly, but let's just take a quick look with using Fibonacci retracement to see where the next kind of resistance might be for Volt. And if we're looking at the 1.618 on the chart, so next resistance could be in this 4.2 cents area. If it stops at the 1.618, it could just rip all the way up to the 2.618, which would put us at around 6 cents. Now, as Steve and I say every time we're on stream, none of this is financial advice. We're lucky if any of it works. Crypto is gambling, and if you're going to gamble, don't risk anything more than you can afford to lose. We're just talking about things that interest us, and we're hypothesizing about the future. So don't go, making huge bets on the fact that the price is going to go to the areas that I just said it's going to go. I'm just saying it could. These are kind of natural Fibonacci zones. So be really interesting to see. I guess I could leave this fib here and do nothing with it for a week. And when we come back in a week, see where Volt is in reference to the chart. But pretty exciting stuff happening with Volt right now. Tons of development. I think Steve is launching Viper in the next 2 weeks or so. That's going to be built on TitanX, but it's going to have a Volt wheel, quote unquote, tied into it. That's going to help boost Volt. Just my goodness, there's so much happening right there. So that's kind of one of my big observations. Also with Inferno.
That came alive.
It came hella alive. And I think the catalyst to this boost is it was added to the Titan farms, which is one of the things we're going to be discussing here shortly, and how these liquidity webs work to bolster the price. And right here, Inferno is just a perfect example of that. Funny story I get to tell on myself here for a second. I had some success with the Inferno top. I drew the fib on it, and I said to myself, when it hit the 786, I was like, okay, it's come back as far as I want it to come back. I'm not going to do anything here. It might go lower. My guess is it will touch the 786 one more time before it goes up. And as soon as it touches that 786 again, I'm going to buy it. Well, I didn't. And I missed a 2.5x run up. So at least I was thinking along the long lines, or the right lines. I just didn't execute. So, oh, well, that's okay. I think it's going to consolidate here a little bit before doing anything else. So those are kind of the two big, exciting, if you will, observations that took off. Obviously, TitanX took off. There's a ton we can talk about. Real quick while I'm here, pTGC, we can see if we zoom out a little bit, it's rounding off, which is to be perfectly expected. It can't run for basically a month straight without some sort of correction. In its previous run up, I'm pulling it back here. You can see that when it ran up, it actually came all the way back down to touch its previous all-time high to that. So I'm almost curious to sit back and watch and see if on this run up, if it comes down to touch its previous all-time high here at 301-ish range. So we'll see. We'll see how far that retraces. Nothing out of the ordinary here. Perfectly normal kind of cool down of the price, and it's going to keep doing its thing. Again, the thing I absolutely love about this is when the price was going up, I was earning more pTGC because of the tax paid on trades. And as the price goes down, I earn more pTGC. So favorite crypto because I have to do nothing and I get more of it. And of course, UFOs very similar in design to pTGC, and we're going to see the same thing happening in the chart here. This was its first real run up, and I expect to see that it's going to pull back. And you can see a couple of these natural zones here where it paused and came back, and then paused and came back. And if I had to guess, we might see a revisit of some of these zones here. So a lot to look forward to happening. But again, I hold UFO. I get more of it. When the volume goes up, I get more of it. When the price goes down, I'm just chilling, doing my thing, letting my bags grow. So those are my observations for the time being. What do you want to share with us?
Yeah, well, I think there's so much to unpack with something like even Volt, because when it comes to bringing it into the liquidity side of things, there's a really interesting story that was actually going on under the hood that if you don't know what was happening with liquidity over the last while and you don't understand liquidity, you would never be able to actually have seen this coming. And so what I'd like to do is I'm going to plant the seed here that we're going to come back to Volt and we're going to actually tell the story of this chart here. And I'm going to tell you exactly why this chart is the way it is. And it's very, very fascinating. But I think it's the perfect time to start talking about farms and start talking about the liquidity that we're seeing and basically that game. We'll start with laying the rules of the game and how everyone has to play. So, Jeff, you wouldn't mind bringing up the farms.
Yeah.
So everyone's familiar with the farms. At the very
Probably
top,
not. That's a bad assumption.
Oh, that's just, yeah, sorry. Everyone's not familiar with farms. We've only been available for a week. So Titan Farms, if you're familiar with the PulseX V1 farms, you may be semi-familiar with this. So farms allow people to provide liquidity. I'm going to come back to that in a moment and really dive into the explanation there, which if you provide liquidity, you're choosing a pair of tokens. You're choosing DragonX Hydra, DragonX TitanX, Tink TitanX, Volt TitanX, Wrapped ETH TitanX, Hyper TitanX, or TitanX and Inferno, which is at the very bottom, which is the newest one. If you provide liquidity, you're going to earn a token called TINK. It is the Titan Farms Incentive Token. And this is an important system to understand. So why would you get a reward for placing your tokens in this? Well, in order to understand that, you have to understand how liquidity works and the risk, even just at a baseline level of liquidity. So in order to participate in farms, you have to have, and the way these farms are set up, and almost all farms are the same, is you have to have 50% of one token and 50% of another. So that means you have to have $1,000 in, let's say, DragonX, and $1,000 in TitanX. And when you bring these to the farms and you place them into liquidity or into the farms here, you're going to begin to earn TINK. Now, TINK's currently worth, is it still worth just over $2? Like almost $3? Yeah, 260. Okay, sweet. So it's holding pretty strong. So when you're earning TINK, it's not necessarily just free money. Now, you're earning yield and it's fantastic. However, what you need to consider with liquidity is your risks. Like, why do you need a reward token to do this? What are you compensating for? What are you being compensated for? So when you provide liquidity, you have your two tokens. When the price moves at all from where you provide liquidity, people are, let's say you're in the DragonX and TitanX pool. Okay. And let's say, for example, that DragonX is going up and TitanX is staying still. What happens here is that people are actually buying your DragonX out of the pool and they're depositing TitanX. So this is this whole swapping mechanism. In order for swapping to happen, people are putting tokens into the pool, they're depositing their TitanX, and they're removing DragonX. So what happens over time here is, if that trend continues, people end up with less DragonX and more TitanX, right? People are selling their TitanX into the pool, they're depositing the TitanX into the pool, and they're removing DragonX. Now, this movement in the amount of tokens that you're going to get incurs what's called impermanent loss. Now, remember impermanent, because it is only permanent if you remove your liquidity. And we'll talk about that a little bit deeper in a bit here. But as this ratio moves, right? Let's say it's 10-1. You have your DragonX to TitanX. As the range moves, there's a mathematical loss that happens relative to if you were to just hold your tokens. Okay, so to put this really simply, if you just hold DragonX and TitanX, and one goes up in value, happy days, right? You've got one bag that goes up, the other one stays still. If you're providing liquidity, you would see the gains still, but you won't see the entire amount of the gains. You'll only see the majority of it with a small bit of loss that'll happen there. And the greater that one price moves away, the more this loss is going to happen, or the larger this loss is going to be. So this is where TINK comes in. And TINK is your compensation in yield that you get for actually providing liquidity. Now, this is important to understand here because there's a few different dynamics that dictate just how profitable, or, just how much yield you're actually going to get. So at 261 in TINK's price, and I think it's about 13, 14, 15% on average, you have to understand that when you provide liquidity, it is likely to not be a play that is in and out. You're likely to want to stay into the farms for a while because prices are going to move. And if you basically put your liquidity in, 3 days later, the DragonX or TitanX or whatever price moves away from where you started, you are going to see, and you rip your liquidity out, you're going to see a very, very different amount of tokens on either end. And you're going to see your value be less than it should have been, right? You're going to basically cause yourself a loss because you acted so quickly. So this is really important to understand with farms, is that when you're participating in something like this with liquidity, you want to act slow enough where you are playing the patient game and not making decisions too quickly. Jeff, real quick, did I miss anything on that base understanding of liquidity and the farms there?
Well, you said a lot. that wasn't a quick overview. That was the overview. No, I think you nailed it. The biggest thing that everybody needs to be paying attention to when you're doing liquidity is impermanent loss, and know what you're risking and for what you are risking and for what reward you are risking it. And you hit that right on the head, really, by pointing out the advantages of Tink. Really, the price of Tink says. So when I first started providing liquidity the day it launched, I mean, Tink was like $30.
Right.
So it looked like I was making tons and tons of money, which I actually did make a pretty good side hustle on that for a few days. But the price just kept dropping, which was expected, or should have been expected, because incentive rewards always drop over time because they're inflating. They're inflating pretty fast. So it was little supply, lots of demand early on, and now there's lots of supply and less demand, which is why we've seen the price drop from $50 when it launched to $2.61, and is slowly bleeding out still. The area that I saw most people get wrecked was playing the Tink TitanX farm. People buying in big bags of Tink to get into what was a very attractive APR. I think it was like 108,000% when I first started. But as the price of Tink went down, they just experienced what you said, that impermanent loss. They kept getting more Tink and losing all of their TitanX. So yeah, I think that was a great explanation. The question I have for you is, what do I need to understand or else?
Or else. So in farms specifically, I love that. That's a great question, because this is so important. And Fox Mulder, shout out to you for asking. You might want to hit the trading fees for non-input tokens. We're going to talk about the or else. Understand this or else. There's a lot of this we're going to talk about, but this is relevant to the farm. So what changes yield, and what do you get? So, or what do you get as yield? Now, if you've noticed, there's a lot of TitanX farms. There is one wrapped ETH. There's a couple of DragonX farms. There's one Hydra. But if you go to the part of the farms where it shows your pending Tink rewards, and right below that, it shows high details. If you look just below that, you can see the earn section there. And if you go to wrapped ETH TitanX or Hyper and TitanX, you're going to see just Tink. You're just going to see the TINC. But if you go over to the Volt and TitanX pool, you're going to see Tink and Volt. And this is because the farms are set up in a way that's actually quite different to any other farms I've ever seen. And this means that there are input tokens and non-input tokens. That's important to remember. The input tokens are Hyper, Hydra, DragonX, TitanX, and Wrapped ETH. Those 5 tokens are called input tokens, and everything else that's in the farm is not. Well, and I'll say Tink is as well. So, well, I guess Tink is, I'm not sure if I'd classify Tink as an input token. I don't think it would be then in that case, because you're earning Tink. Anyways, not important, not as important. What is important though is you earn Tink when you're in a pool that is 2 input tokens, and that's it. But if you're in a pool that does not have, or has 1 token that is not an input token, you're going to earn Tink plus that second token. So for this instance with Volt, when you provide liquidity with Volt and TitanX, you're going to earn Tink and Volt because you're not having 2 input tokens together. The same is going to be for Inferno as well. So if you go down to Inferno, we're going to have Tink and Inferno that you can earn from that pool as well, because the input token, there's no TitanX input token in there. So this is going to dictate your rewards on one level, right? So this is part of the or else. You need to understand what you're earning and what you're being compensated with. The second thing we need to understand is the APR. Where does the APR come from? This APR has a combination of factors that dictate their overall APR. Now, APR is based on, you don't compound, you just leave your liquidity in there and it just accumulates over the entirety of a year. Now, if you were to go ahead and, like Jeff's got up there, start to basically take your rewards, put them back into the pool in the various different types of tokens that you have, well, you're going to compound and you're going to see things grow quite quickly. As you can see, by compounding weekly over the course of a year, you can go up to 461% ROI, and so on and so on and so on. Now, depends on what kind of game you want to play. I'm not going to go too deep into this right now because the compounding is not as important today. But what you do want to understand is where this ROI is coming from. So with Tink being $2.60 some odd cents, right? This is the rewards emission that's being emitted to everyone. So everybody in the pool is sharing every 1 second, or all the pools is sharing every 1 second, one tink going to the pool. So all these percentages that you see right now are based on the price of tink, the amount of people, or should I say tokens, that are in each of the farms, right? And as the people in the farms, or the users in the tokens, increase in the farms, right, having the tink price stay where it is, the rewards are going to decrease on average per person, right? If there's 10 people and there's 10 cookies, right, 10 people, each person gets a cookie. If 5 more people show up, or 10 more people show up, everyone only gets half a cookie, right? And so on and so forth. This is the same thing. Everyone's sharing cookies out here. And as more people show up to the party, there's less cookies per person available, right? So that's the same thing. Now, the thing is, though, is these cookies, or tink, could become way more valuable, right? And therefore, even if more people show up to the party, there's still more rewards to be had, because even though the same amount of tink is being sent to all the people, they're worth more. So your APR would increase. So it's important to understand that when you're providing liquidity in the farms specifically, that this is a two-way street in terms of making more rewards, right? You can also make more rewards or less. And this is why I really want to paint the picture here of a slow game for farms, because with impermanent loss, right, you have a little bit of potential losses that are coming in just from providing liquidity and the prices and ratios moving around together, right? That's your first thing you got to be aware of. The second thing is your rewards you're accumulating over time, right? So as you accumulate rewards, if you are not keeping track of how much you've potentially lost and how much you're gaining, you could potentially set yourself backwards. So playing this game is a nice, slow game. And if we actually, I don't know if I want to bring Volt up quite yet, but no, I won't bring Volt up quite yet. But the key here to understand is that when you place your tokens in liquidity, people are going to buy and sell tokens in your pool, and they're going to exchange them for the ones, for either one that you have. And you're going to end up with more tokens on one side than the other. Even if it's a small deviation, it is guaranteed that you're not going to end up perfectly with the same amount of tokens at the end. So I want to make you very aware that when you play this game, if you're attached to your tokens, you're playing the wrong game. You should not be playing farms if you're attached to your token amounts. Before I go for any further, Jeff, how are we doing? How am I?
It's good. It'll be curious to see what questions pop up from this, because it is a lot of information, and liquidity farming, at least for me, took me quite amount of time to figure it out. What you just said there, I think, is the most important part of all of this, is understand the game you're playing. I talked about this on the last stream. I'm going to talk about this in every stream, because I see it happen all the time, where somebody says, oh, I want to make a little bit of extra money with my bag, so I'm going to do some liquidity providing. And they take their core bag and they put it into a liquidity pool, and then it goes against them for whatever reason. There's a pullback in the price, or something launches and people are selling to ape somewhere else, and they ultimately end up selling most of their bag into ETH, or they end up I'm using TitanX ETH as the example here, or the price goes against them and they end up having way more TitanX than they had originally started with, but the price of that, the value of that pool is significantly lower. And then they're like, well, what happened? I didn't, I lost a bunch of money, or I don't have any TitanX left. I only have ETH left. And all I wanted to do is grow my bag size, and now I have nothing. What I have told the people I work with is, if you want to provide liquidity, do that with like an entire separate wallet. Just like fund it with USDC, and then make the trades you need to get the pairs that you want. So that way you're never worried about losing your core bag. And that's one of the biggest mistakes that I see, is people just like, oh, well, all this period of time I've been growing my UFO bag or my pTGC bag or whatever, Inferno Volt, and I put all this time and effort into it. Now I'm going to do a liquidity pool, and they just blow their entire bag up because they don't know what they're doing. It's a different game. The hodl game is just that. Get your bag, hold it, forget about it. The liquidity game it's a different game with different endpoints, different goals, all that type of stuff. So if you're going to play the liquidity game, just know what game you're playing and know what you're willing to put into it. I think that's just the most important thing.
I think, yeah, it's really knowing the game. If you don't know the game, it doesn't matter what game it is, right? If you don't know the game of even TitanX, something so simple, even pTGC, I mean, you probably push the envelope on that because it's really easy. You don't have to really fully understand the game, but you should never play games you don't know. Like you should really, 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 and this isn't financial advice, right? We're talking games here, not finances. But play games that you are familiar with. And if you don't know the game, go learn it. Go ask someone. Go find a way to learn what the game is. And when you see the game in its entirety, you'll then know what to do. And at that point, then you'll be able to make the best decisions for yourself. Otherwise, this is how most people get wrecked, right?
Yeah. And wrecked with thousands, like big,
Yep.
lots of zeros at the end. I know it's one of the things that both you and I offer consulting on the side, and people are like, oh, you're just showing your services. Let me give you a situation that would you rather spend, I don't know what your rate is, my rate doesn't matter. Let's just call it $100 for an hour to be taught how to do something correct. Or would you rather ape into the TitanX farm with $10,000 and lose 9 of those $1,000 because you didn't know what you were doing?
Mm-hmm.
Whether it's Steve or I, if you don't know the game, like join a mastermind or hire a consultant to teach you the game, because you will spend way less being taught over an hour than you will learning the hard way. And I say that because I've had multiple people reach out to me and say, oh, I mean, I'm just so distraught. I aped into the Tink farm early and I bought a bunch of Tink off of the market. They bought it at $20. They bought it at $30, and they provided the thing about these farms, it's full range. So if you're going to put in $1,000 of Tink, you have to put in $1,000 of TitanX. So they put in $2,000-$3,000 of Tink. They had to put in a like amount of TitanX, and then the price of Tink drops 90%. So the value of most of their TitanX is gone at this point, and now they're holding more of a coin that has less value. So that person paid a significant price to learn a lesson that could have been taught to them in 20 minutes. And it's like there's a ton of value of knowing how to do liquidity and knowing how liquidity affects price, which is what I think we'll get in next. But if you don't know what you're doing, you're just stepping into the ring and you're about to get KO'd. And that's what's super important, is just know what you're doing. If you don't know what you're doing, find someone that does, join a mastermind, learn the right way. Because at this point in the bull market, if you lose 6 to 8 billion TitanX, that's hard to get back. It's really hard to get back because there isn't much TitanX coming on the market anymore, and people understand that, and fewer people are selling it. So it's hard to get back. And even if you did get it back, it's going to cost you 2, 3, 4x more to get back. So be very careful at this stage of the bull market with the games that you play, especially if you don't know what you're doing.
100%. Well, and unfortunately for DQ Crypto, thanks for your comment, my friend. Thanks for sharing. But he says, yep, I blew up my Volt bag overnight. Sometimes coins pump so hard you lose your entire core position. Man, that's important. That sucks, but this is part of knowing the game. And unfortunately, that sometimes doesn't go your favor. And you know what? The thing about this is with this game too, you can be super educated. You can know exactly what you're doing and still get it wrong because the market acts in such unpredictable ways. It's the right person talks about something when you're not expecting it. A tweet comes out. I mean, and the price moons or dumps, right? Like there's just so many variables when it comes to liquidity and playing the games that you really want to make sure that you are prepared to take the risks and you understand the risks. Yeah. And you've found the people that can educate you. So I'm with you on that one. 100%. Education is key.
Absolutely. And shout out to DQ Crypto for saying that. I mean, that's just vulnerability. That's awesome. I appreciate you sharing your experience. So hopefully somebody can learn from that. Somebody listening to the stream, like, oh, crap, that happens. That these guys aren't just making stuff up. Hopefully you can get that bag back because as we can see, Volt's mooning, and that's a perfect example. Actually, we see this breakout in price run up. If let's say DQ, or just I won't say that again. Let's just say somebody puts their bag in at 0.17. And all of a sudden it does a 2x, boom. Well, now the majority of that person's bag is gone because everybody bought their Volt from them. And in exchange, they got a token that hasn't gone up quite as high. So, I mean, hopefully the good news for DQ is that he was left with TitanX, and TitanX will ultimately go up also. But it's a tough lesson to learn, because when things run, they run pretty quickly, especially in a breakout into new price discovery zone. It can move very fast. And if you're asleep, literally asleep, you can wake up in the morning and be like, oh, well, that was fun. I don't have any more of that left. And it goes the other way too. Like I'll tell on myself a little bit. I knew the game I was playing, and it still happened faster than I thought. I got into the TitanX farm, and I did really well in it for a day and a half. And I knew I was getting close to the price is about to start going down really quickly. I thought I had more time. So I was patient, and I went to bed. It's what happened. And I woke up in the morning, and Tink had gone from like $11 to $3. And I was like, well, it is what it is. My fees that used to be several $100s were now less than that. So I know what I'm doing, and I still learned that, shit moves fast, man. It just is what it is. So fortunately, it was money I could afford to lose, and that was fine with that. It was a small side bet, and the bet didn't go favorably. But I had made enough in that farm previous that I didn't care. So just know the game you're playing.
Yeah, 100%. Well, and on the note of the volatility, so I want to speak to now how the different types of liquidity setups affect price. And then we're going to start to go into the deeper side of things. Okay, so stick with me on this. We're going to get a little bit more technical, but I'm going to try and take this slow here, work you into this so you can understand the importance of this. Because I'm telling you, if you don't know this, the or else is big. This could cost you majorly not to know. In fact, if you don't know this, oftentimes you're giving someone else your tokens at the wrong time if you don't understand this stuff. So these farms, very, very similar to the PulseX farms, right? And similar to the UFO interface that provides liquidity with UFO. These farms or liquidity positions are all what's called full range, meaning when you have 50% of your or $1,000 in token A and $1,000 in token B, that scales from the point that price is right now for those between those two tokens, right, all the way across the highs and the lows to basically zero and to basically infinity, right? So the whole way liquidity covers people buying and selling. It scales perfectly, right? Now, the benefit of this is volatility. Well, not for you, obviously, as a liquidity provider, but for people that want to speculate and that want price performance, right? They gain volatility out of the V2 style of liquidity. Now I'll explain why there's even a motion here that there's a difference, because we'll talk about V3 liquidity shortly. But with V2 liquidity, volatility for price charts is fantastic. Like you can have millions of dollars in liquidity, allow people to move economic energy in or out fairly freely, and still have volatility, right? A perfect example is Volt, right? If we were to go look at the Volt chart and look at how much liquidity it's got, right? The Volt chart has about, what is it? Where is the liquidity there? Oh yeah, $11.2 million in liquidity, and it's still moving like it is, right? Now, this is the effect of having enough liquidity where or big buyers and sellers can come in and out, but not too much liquidity where it's impossible to actually move the price, right? But this is where we get into the deeper side of things, where we have to talk about version 3 liquidity. Now, again, stick with me on this because it is critical to understand if you want to get the full picture. And we're actually going to paint the whole story of this Volt price chart. Okay. So, Jeff, could you bring up the version 3 pool for Volt and TitanX pair? So, while he's doing that, version 3 liquidity came out. Can't remember how long ago, a couple years ago. And basically what this allowed people to do is, instead of you providing 50% tokens to the liquidity pool, and it basically covers both the ranges from low to high on either side with both tokens, what version 3 liquidity allows you to do is be selective of where you want to place your funds. And even you could place entirely one side. Like let's say you have the Dragon X TitanX pair that you want to provide liquidity for, right? you could place TitanX below the price, right, underneath, and DragonX above, right? Because with the DragonX TitanX pair, that means that the base of that pair is in TitanX, right? So if it goes down, right, people are buying TitanX in that pool. If it goes up, people are buying DragonX and increasing the price of DragonX. So with version 3 liquidity, I think if you put Volt win, it should come up. So if with V3, you can provide basically liquidity for either one side or the other, or a mix of some ratio. And what this allows us to see is, look, if we look at this chart here, now this is a chart. This pink thing that Jeff is moving around here, this is a liquidity chart, and it's painting the picture of what is going on underneath the hood for Volt. Now, as you can see, there is a basically like a nice pink thick wall that kind of goes along the bottom as a nice average all the way from left to right. Now, what this is vertically speaking, this is how much TitanX and Volt is in the liquidity pool at different price intervals, going higher and lower. So you can see the average is quite high, but you can see these little like wicks or little towers that are kind of sticking out. You know, it's got levels to it. And what this is people like you and I going and placing liquidity in a specific range only. Now, this comes with some benefits and it comes with some risks, right? When you provide liquidity at a smaller range or a tighter range, you're going to earn more fees, right? So the reward level goes up when you're within your range, right? But as the price moves away, either higher or lower from that range that you have, then you are actually going to completely lose one side of your liquidity position and you're no longer going to earn fees. So I'll say that one more time. So if you were to provide liquidity, price is right here. You provide 50% liquidity in a tighter range on V3. If the price goes all the way outside of your range to the low side, you're going to be left with the token people were selling and only that token. In this case, you'd be left with only DragonX, right? People are selling DragonX and they're buying up, they're removing TitanX from the pool. If it goes the opposite way, the opposite is true. People are buying DragonX and leaving you with TitanX and you're not earning any fees. So this is the big thing about liquidity, or about V3 positions. And this also allows when people place V3 positions to change the way price moves. Okay. So as you can see, there's the little plateaus that are there. As the plateaus rise, this makes price slow down in terms of how fast it can move upward per dollar that is buying up the token in the pool, right? Now, if we go back to the Volt chart, I'm going to paint the story for you of Volt so you can understand how this whole liquidity concept we're talking about can really impact the price chart. So with Volt on day one, you know, or the first few days, people were providing liquidity and there wasn't a lot of tokens going out. The system was generating liquidity on its own with its buy and grow, which I can't remember the exact percentage of it, but it's essentially pouring money into its own liquidity pool.
Yeah.
Now, can you bring up the deck screener for Volt?
Yes, there.
Perfect.
Oh, deck screener, sorry.
Or sorry, this works too. Yeah, no, or Dex Tools is fine. I'm so used to saying deck screener, but yeah, any chart with Volt's perfect. So if you look at this chart, you can see the major run up it had, right? It went all the way up to nearly 3 cents. Now, if you were paying attention to liquidity during this time, what you would have noticed on the liquidity side of things is right at the 3 cent mark, someone had gone in and placed an entire position of Volt way above the price. Now, why this is important is because you had essentially this nice plateau of liquidity in this giant wall, essentially. And what that meant is a ton of economic energy would have to pour in to buy up this position and to continue to go higher in price. So what essentially happened here is as price ran up, this wall was sitting here. The market ran into this wall and could not buy through it, and it prevented price from going any higher. And this is why we went down, we went back up, and we kind of consolidated. People were not able to buy through this liquidity wall. And if you don't know to look for these things, you might think that the price is going to keep going. Like, I'm sure tons of you who weren't paying attention to liquidity and who weren't watching the liquidity thought for sure, yeah, you know what, we might be going to 5 cents right now. We might be going to 10 cents right now. But if you were watching the back end, and if you're going to app.uniswap.org and going to the pools, you would be able to see that there's no way in hell we're going higher right now. You know, you can see these things in advance. And so this comes into the concept we were originally talking about. If you don't know this, you're going to lose it because someone has the advantage over you, and they're going to basically be taking your coins out of your hands or taking your profits out of your hands. So I'm going to pause there and make sure it just made sense, because just dumped a whole lot on you guys. But Jeff, how are we doing? Where are we at?
Well, I don't know that I'm the person to gauge that against, because I know what you just said. So the better question is to chat. What of this makes sense? What of this doesn't make sense? Because I mean, what you're saying there, Steve, is like, yeah, you can see these red candles right here. And that's when the economic energy hit that. And it's called a sell wall. You'll hear people talk all the time about liquidity sell walls and buy walls. And really what a sell wall is where somebody puts all their economic energy in a liquidity pool at a certain price. And when the coin trades up into that area, then it has to trade through that. So if somebody's selling $1 million, basically $1 million of economic energy has to come in order to push through that sell wall. And now we're looking at here the Volt LP on Uniswap, and that wall's gone. So clearly that person, it either was sold through or they sold enough and removed their liquidity position, and now the price can move relatively freely. I mean, we don't have any real resistance. Got a little one here. It's not anything. And then you got actually a buy wall here. So maybe not a bad place to put your liquidity pool in front of. But yeah, it's just understanding. Okay, good. We got feedback from Robert Smith. I'm a newbie when it comes to liquidity, and you guys are explaining it well. I'll say Steve is explaining it well. He's doing a great job. So with that being said, let's move on. If there aren't any questions from the crowd, I'm not seeing all questions. Do you see any on your end?
I don't see anything. I think everyone's just kind of listening in. I got a couple of comments saying this is a reference video. Appreciate the alpha. No one does it better. Appreciate you being here. Thank you, DQ. Yeah, let's just keep going here.
Perfect.
So I really want to harp on real quick. Get used to, if you're not familiar with reading the liquidity here, can you zoom in on that on the actual chart here? I want to just show people how to read this real quick.
Is this the best way to do it, or should we use metrics?
You know what? If we could bring up metrics, that'd be actually awesome, because I want to talk about the ratios real quick and get people understanding how to read which way things are going, and be able to actually utilize this instead of it just being some kind of mystical practice we're doing here.
Yeah, and this is a great tool. One of the best tools that I have, that I use. Let's see, am I sharing appropriately? Yes. So I'm on Metric Finance. Select your pair. I will share with you that all the buttons are touch slow. So when you select something, it's usually 2 to 5 seconds before it populates. It just is what it is. So we're going to do what one? What one did you want to do?
We can even do TitanX and Wrapped Ether DragonX, one of the two.
Okay. TitanX has more sell walls with liquidity, so we'll be able to see them here. And then there's a whole other thing that we haven't discussed yet, which is the 1%, the 3%, or the 0.5% pools. Yep. But pretty much for everything in the TitanX ecosystem, the 1% pool is where the money is. So just focus on that.
Yep. Basically, it's just, these are just talking about the fees, right? So liquidity providers earn more fees with a higher percentage pool, lower percentage pool. You earn less. So you're disincentivized as the percentage goes lower.
Yes. So here we go. This is a great chart because this shows the TitanX liquidity, and the first thing I see straight away is a buy wall, which is awesome.
Yep. So okay, I'll ask you this question real quick here. So if walk me through, you look at this liquidity chart here and walk me through what you're seeing, what you're expecting based on what you're seeing with this chart.
Okay, let me crack my knuckles. Get in here. So I'll do two things with this information. The first and foremost is I'll bring up the TitanX chart.
Yep.
And I'm a huge fan of Fibonacci retracement. So I've already got, let's see, I don't have them on here, which is unfortunate, but on my other chart, I've got supports and resistance listed off, and I will throw the fib on this. And we got to take it from, well, we'll take it from there because that's a pretty good. So this will give me an idea as to where I can expect to see some of the pullbacks happening. And you can see some of the Fibonacci lines are lining up with areas where the price kind of stalled out, which is very common of Fibonacci. So this will give me some kind of indications as to where the price, if it's going to retrace, where it might go to, if it's going to go farther forward, where it might go to. And then I come to this chart, which is the liquidity chart, which Steve has been talking about the whole time. And I look at where the liquidity is, where the sell walls are, and where maybe some of the buy walls are. And so this really large tower here is basically a buy wall. Someone has a big position there. They think that the price of TitanX might come down, and they're willing to buy a lot of it at this price. So what I can do is I can figure out what that price is. I use my adjustments down here, minimum price, maximum price. What's interesting about this adjustment is it's inverse of what you think. Maximum price doesn't mean the price itself. What that means is the maximum amount of TitanX that you get per ETH. So if the price of TitanX drops, you actually get more of it per ETH spent. So if I wanted to adjust the maximum price, that actually is reflective of the price dropping in TitanX. So I'm going to move my maximum price here, and we'll see this line move, which is actually representative of TitanX price dropping. So as I move this forward to this buy wall, which is right here, the buy wall is essentially starts at a 4% price drop and goes all the way down to a 9% price drop. So personally, if I'm going to be providing liquidity, I want to be on the low end, right essentially where this buy wall is, because it's going to take a ton of economic energy to get through that, and I want to be earning fees right there. So that's more of a concentrated liquidity. That's a little bit riskier. And then I can see from here, the price moving forward, there's a little bit of a sell wall here. It's not too much economic energy to get through it. And then it's kind of open sailing all the way up until this next sell wall. And that's representative of 25% price increase. So price to the upside of TitanX. So I would honestly just leave that side right where it is, because there's plenty of room in here to catch trades happening before you get to the next buy wall. So this would be looking like a 9% to the downside, 25% to the upside. So then I'll go to my chart and I will put in a long position on my chart and just kind of see where that lines up with the current price and retracements. So this retracement level, yeah, so 9%, look at that. 9% here kind of lines up exactly with where one of the pullbacks went to right here. Can you see that, Steve?
Yep. Just barely.
Yes.
I can see it. Yep.
Yep. So somebody's confident that it might go there, and then 25% to the upside is up here. And what I'll be really curious to see is if I do a reverse fib on the chart, if that lines up with anything. So that's what I'm going to do here. I'm going to pull that back. I'm going to do a reverse fib. Oh, I got to adjust here. Give me a sec. I'll pull this down to its previous low, and let's see where that number is. And my guess is it's going to be pretty close. Yeah, pretty close to the 2618. So it's just above. So nothing ever goes up and hits it directly. Sometimes it goes over a little bit and cracks in that area. Sometimes it comes up short. But that puts me at a level that's pretty close to where we could expect potentially the price of TitanX to go in its next couple of days of moves. So this would be the liquidity range that I think would be really good if I wanted to do concentrated liquidity. So going back to simulate, there you have it. I'd have a 9% downside, a 25% upside. This was an example. Do not go and do this and be like, well, I saw it on stream, and because you have to be pretty fluid with this and understand like where it's going to go. And if that changes, if this sell wall just disappears, if this guy yanks his liquidity, suddenly the downside could run a lot farther down, and you would need to know how to adjust that and play it on the fly. But these are the types of things that I'm looking at if I'm providing liquidity, not in a farm. Now, the beautiful thing about the Titan farms and the UFO farms is, again, you don't have to worry about this stuff because it's full range. So if you just wanted to use this tool to maybe understand what the price might do, this could also give you a clue that in the next 3 to 5 days, we could expect or hypothesize that the TitanX price might go down 9 to 10%. Could always go farther again if this guy removes his liquidity position. And it could relatively easily run up 25% before hitting another Fibonacci retracement zone and somewhat of a buy wall. So that's how I kind of tie all of this stuff together. I mean, you said, give me an example. I gave you an example.
No,
was that good? Do you have questions?
Yeah, that was perfect. No, you painted that really, really great. I mean, from the liquidity side to the price, I think you absolutely nailed it. I just want to echo one thing importantly, or for on my end, is that when it comes to looking at this chart here, being able to look at this and be like, okay, someone's placed liquidity below, meaning there's going to be kind of a cushion for price to come down, and also seeing there's a little bit of a gap as it comes back up, meaning price will want to move easier, higher, and it'll be more difficult for price to go a little bit lower. Doesn't mean it's not going to do that, but being able to see, okay, it looks like price is going to want to move higher versus have a harder time going lower. This is one way, just for the sake of example, that you could utilize this chart as Jeff was echoing. And now if we were to take this chart and we were to say it was inverted, right? This wall here is above the price and everything else is below. This would mean that the price is likely to want to go easier to the downside, right? So it's going to take a lot more economic energy for this buy wall now, or the sell wall, I should say, to be essentially moved through and pass through for price to go to the upside. So for just looking at these charts and making decisions, if you can read a liquidity chart, you are going to be so far ahead of the crowd, because you're going to be able to predict even roughly and hypothesize where things might go and make way more educated guesses instead of just closing your eyes and throwing a freaking dart in the dark. That's essentially what you're doing unless you know this stuff. So I think you nailed it absolutely perfect. And I just want to add that little piece there. But what I would like to do, unless you have anything else you want to add to this, I want to talk about Hart's Law, liquidity webs, and how liquidity that is tied together moves together, and the importance of understanding that, because we're going to talk about pTGC, UFO, and all that as well.
Yeah, and we only got 8 minutes to do it. We've already been doing this for 52 minutes.
I know, it's crazy. So this is the crazy thing about liquidity, guys, is this is like the tip of the freaking iceberg with this stuff. So liquidity is so deep, but yet if you can understand it, you will get so much of crypto. You will understand so far and be able to see so far beyond what the average user can see, and make decisions that most people can't make because they don't have the information you will have when you know this stuff. So
information is power. And
oh my God, is it ever? I would even say liquidity is the most important thing to understand in crypto, in my personal opinion. If you don't understand liquidity, you're basically blindfolded in this game.
Yep.
You're basically blind.
100%. So let's talk about Hart's Law and take a look at the UFO farms. And it's basically the same at this point. So whether you're into UFO, pTGC, TitanX, when you're looking at the TitanX farms, the UFO farm, Hart's Law, how everything that's bound together in liquidity can raise and lower together. So this is one thing I understand, but I'm not very good at explaining yet, which means I don't understand it well enough. I understand that. I would love to hear how you walk through Hart's Law as it pertains to, say, pTGC, UFO. It's really going to be all the same. So the name of the token is irrelevant. It just helps you understand the UFO liquidity web, pTGC liquidity web, the TitanX liquidity web. It's all essentially the same. And we still haven't even talked about Element 280.
That's so true.
Oh my God.
I'll make sure we touch on that. I'll make sure we touch on it a little bit here, because it's very, very, very relevant to this whole conversation.
Yeah. So first thing, what I'm going to do is I'm just going to go to the UFO. Actually, I'll do it this way. I'll do a search for UFO. And what we can see is UFO is paired to Pulse. It's paired to DAI. It's paired to pTGC, Hex, PLSX, Inc., Hex again, a bunch of others, Wrapped Bitcoin, Teddy Bear, Tropa. It's paired to all of the big players in the RH ecosystem because UFO is a genius at maximizing Hart's Law. So what is Hart's Law, Steve, and how does it affect these farms and these coins?
Yep. So Hart's Law, essentially it's liquidity bonding, but the principle is essentially that tokens that are paired together in their liquidity move together in price. And the more they're bonded together, bonded meaning if there's a dollar, if someone's created a liquidity pool and they've put 50 cents on one side and 50 cents of two tokens, well, I mean, there's nothing really going on there because there's such a little amount of economic energy to fix any of the prices that have to be fixed or moved to what we're going to talk about in terms of if they were spread out, that prices aren't necessarily going to be linked super well, right? Or they're going to move super, super quickly away from one another. But if, let's say you have 5 tokens, right? Let's say you have Wrapped ETH or Pulse and you have UFO, maybe you have pTGC, you've got Hex, maybe PulseX. If those tokens are all paired with a ton of liquidity, right? That meaning they have about like $10 million, they got $5 million, they got $1 million versus like $1,000. Well, what happens is because PulseX, UFO, pTGC, Hex are all derived and their price is based on a core token, which in this case would be Pulse, right? That's their main liquidity pair where they derive their price. And this is the same across crypto, right? TitanX is derived in Wrapped ETH, right? It gets its US dollar value based on its cost in ETH or its price relative to ETH. And so if ETH moves up or Pulse moves up, then because everything is derived in the price of ETH or Pulse, everything therefore rises with it. Now, things get a little crazy when you start to branch out. So I'm going to keep this simple for now, but the main premise for like UFO, for Element 280, for pTGC is based on this and utilizing this liquidity and Hart's Law concept. So what happens is when you have a token that is taking expected high performing tokens and you are deriving its price from other high performing tokens, you are essentially setting this one token up, let's say it's pTGC, to effectively have itself being pulled up from multiple angles. The way you can think about this is like you've got an object. Let's say it is I don't know. Let's say you've got a battery, right? And it's got a bunch of balloons that it's tied to, right? Now these balloons represent the price increase of other tokens that it's paired to, right? One balloon might be pTGC paired to PulseX, one balloon might be pTGC paired to Hex, and so on, right? If for some reason, right, this works both ways for this example. So let's say someone pokes a hole in one of the balloons, right? It is going to slowly drag down the price of pTGC, but the other balloons are going to support it, right? It's going to prevent it from free falling, right? If it's just paired to one balloon and you pop the balloon, gone, right? Erasing the price. But if you have a token, or let's say a battery here that is paired to a bunch of balloons and only one of them pops, the other balloons are going to support the price. But if all the balloons pop, everything falls. So the opposite is also true. So if you've got a battery and you have a bunch of balloons and Jeff or I come up and start inflating the balloons, meaning pushing the price up of one of these tokens individually, the battery is going to start to lift a little bit, right? Because it's gaining the ability to lift the price of pTGC. It lifts with it. And if you start to basically inflate the prices of or basically put more air into the other balloons, this battery is going to rocket away. It's going to be very easy to lift in price. And this is the effect of Hart's Law, where you essentially, the more balloons you tie to one thing, right, the easier it is for that thing to go up when the balloons are all going crazy in their appreciation. This is crypto-wide. This is a microcosm of this is PulseChain or TitanX or Element 280 or pTGC to go even more micro, or UFO to go even more micro. But this expands throughout crypto. This is why when Bitcoin pumps, everything else pumps, right? Bitcoin is basically pulling everything. It's the giant balloon. It's the hot air balloon pulling up the party balloons, right? Attached to the battery. So when you're thinking about how pTGC, Element 280, these TitanX ecosystem, PulseChain ecosystem, and why everything moves together, this is why. And for pTGC, Element 280, and UFO, when you understand that there's a buy and burn, that as these other pools are lifting pTGC, UFO, or Element 280, or any of the other tokens up in price, these tokens that have taxes are basically saying, thank you very much, in the sense of they're buying tokens and burning tokens as the price is going up, accelerating that growth exponentially. This is why you see the price chart of UFO and pTGC doing what it's doing. And I'll pause there for a moment because, again, kind of going off the deep end. But I think if you could bring up the chart for pTGC and we can show people the effect, especially in the wrapped pulse chart, not the USD chart, you'll really get to see how something like this can work. And if you can understand this concept, you can begin to see into the future. I'm not even kidding. Like you literally can see the future when you start to grasp liquidity at such a deep level.
When you grasp liquidity at a deep level, you can see into the future of pTGC, and it's ridiculous.
Yep.
It's ridiculous on steroids. Same with TitanX, but you know, if Richard Hart is going to do what people expect will happen, which expectations are always a bad idea, but this is where it gets silly. So I'm in USDC. I'm sorry, pTGC wrapped pulse. That's what this chart shows.
And can you click on the daily chart just to give it a little bit lower resolution? So
that's a sweet chart.
It's so funny to look at this chart because this is one of the best charts I've ever seen. Seriously. But guys, so when you're looking at this chart, this is now I want to be very clear on this. When we're talking liquidity, the USD chart does not matter. It does if you want to look at your gains. It does if you want to see your ROI. But if you want to actually see the effect of liquidity bonding and liquidity webs, because this is a concept I want you to start to get familiar with, this is what can happen when you set up your liquidity with the right tokens and you have the right underlying tech to take advantage of already high-performing or potentially high-performing tokens as well. So, Jeff, why are we seeing this hockey stick here in pTGC? What the hell happened to cause this?
The machine is working, Steve. The machine is working very well. So pTGC taxes buys and sells, and with that tax dollars, a few different things happen. Stakers are paid out, reflections are paid out, but the DAO, the biggest thing why we saw this happen is because the DAO has just been collecting pulse for a long period of time, and it has been buying Hex. It has been buying Pulse, has been buying PulseX, has been buying Teddy Bear, and creating more liquidity. So it'll buy Hex off the market, it'll pair with pTGC, and it will burn that liquidity. Burn liquidity means it can't ever be extracted. And so what the DAO of pTGC did very, very well is they spent basically the month of July and August buying Hex, and a lot of it, and just thickening and thickening and thickening its liquidity pair with Hex. And then all of a sudden Hex did a 10x run roughly.
There's a number of X's in it.
Lots of X's.
It was cooking.
And because Hex is such a big protocol in the terms of market cap, billions of dollars, when it moves, it takes a lot of economic energy to move it. And so when that happened, it's just like taking that helium balloon that Steve mentioned and pumping a bunch of helium in it, and it just dragged pTGC up with it really, really fast. And then, of course, we saw PulseChain do a 2x. We saw Teddy Bear start to move. We saw PDI starting to move. And so what was happening is all of those balloons were just getting more helium put into them, and it just pulled pTGC up by its ears straight up.
Mm-hmm. Mm-hmm.
Pretty fun.
It's
a lot of fun.
It's It's so much fun. And I know it's hard to consolidate this entire conversation into under an hour. I mean, we have, honestly, in my opinion, we haven't really gone into any overly deep stuff. We're still talking about principles and foundational stuff with liquidity. So, guys, if you're interested in this stuff, I highly recommend you doing some studying, doing some deep dive video watching, do some research, even get in contact with one of us about if you want to learn more, to work with you personally, because understanding this is unbelievably important if you want to get ahead of the curve. Seriously. And yes, I was even thinking that we may need to do a part 2 at some point to kind of go even deeper, because with pTGC, the reason why this is so important to understand, guys, is because PulseChain hasn't moved. It's done a 2x, not even from its bottom, and you have a token that is doing this. Now, this isn't just like a moment where you want to focus on pTGC. I mean, it kind of is, but you also want to understand it principally and conceptually, so you can apply what is working for pTGC to other tokens, to other ecosystems. Because if you can understand that pTGC has done this move when something hasn't actually moved yet, which the whole purpose of this is to leverage when it moves, right? You can then think to the future like, okay, well, this thing hasn't moved. Well, the underlying piece, Pulse, hasn't really moved at all, yet this thing has done hundreds of X's. What could possibly happen if Pulse actually moves? Then you start to play the game that makes you see the future, right? Yep. Now, because you're understanding fundamentally what's going on here, you can now begin to predict and foresee and see where you want to be, right? And this applies to the TitanX ecosystem. This applies to PulseChain. This applies to anywhere in crypto, but specifically for these tokens, because I believe that these tokens, and I'm sure you would agree, are where it's at. Honestly, I don't think there's a better place to be.
No, I don't think so either. Just from how the smart contracts are set up. That I've said before, what I love the most about these two ecosystems is the pTGC UFO ecosystem. It's the easy button for me. I buy, I hold, I do nothing. Absolutely nothing. I stake by pTGC. That's fine. Personal choice. You don't have to if you don't want to. You'll still get reflections. Same with UFO. You'll still get reflections if you don't provide liquidity, and that's fine. I like TitanX because it kind of gives me my desire to scratch the itch of clicking buttons, playing with the farms and kind of rotating into different ins and outs, rotating into Volt, rotating into this type of stuff, playing a little bit of that game. But they're just great places to be. And one of the things that's fun to see, now that we've kind of given a background as to how some of these things work, I want to give 2 examples of when this happened, when this liquidity bonding worked positively, because it can go the other way. Absolutely. If an entire ecosystem crashes, it's going to drag you down. It's just, that's the way it works. But on the front end of the bull market, it's highly favorable. And so we'll go back to Volt. This worked really well in favor of Volt. Volt was actually, let me remove some of my lines here so we don't have a seizure while we're looking at this.
Real quick, shout out to Corey Barnes. I appreciate that. It's always fun to talk about liquidity on stream. Yeah. I'm glad you're enjoying this.
Volt was on its way to a correction. I was thinking it was going to go back to its previous all-time high, which lined up perfectly with the 786. I was actually really excited about that. And then farms launched. And so what happened when the farms launched? We went from about $1 million, call it $2 million of liquidity, to 11 million. So all of a sudden it went from, it was still a sizable liquidity pool. It wasn't like it was small, especially for the size of the coin. I think it was like 2 or 3 million market cap at that time. But the liquidity went up 5x. So all of a sudden you got this huge liquidity binding to TitanX. And then what happened? Well, the price of TitanX went bonkers. Look at this, straight up like an elevator shaft. What did it do to Volt? Well, very similar. very similar. The price went up. There's a lot of other things happening too. People are buying Volt because they're trying to get in on the next protocols. They understand it might be the next DragonX. It wasn't only because of the liquidity bonding with TitanX, but liquidity bonding with TitanX is what kept it from falling farther. And then as TitanX started to run over the last 2 to 3 days, it just dragged Volt. It gave more power to the momentum it already had, and boom. So this line right up here is thank you TitanX Farms and liquidity bonding. It did its job. And then another example of that is TitanX. It started to pull back yesterday after a good run. Volume dropped quite a bit. Yeah, volume's down to 700,000. It was up in the 1.5 to 2 million. But all of a sudden, ETH started to move. ETH went up about $150, 3 to 5%. But again, ETH is a giant whale. So as the whale rose up, it just dragged TitanX with it a little bit farther. So it kept the momentum going as ETH went up. That's another example of liquidity bonding. So we're seeing this play out very clearly if you know what to look for. Otherwise, it's just like, oh, yay, the price went up, or why is the price going down? But when you know what to look for, then you're not too totally surprised. So if we see ETH starting to rip, well, what's going to happen to TitanX? It's going to go up.
100%.
Anything you want to add to that? Interesting that TitanX liquidity is actually less than Volt. That's really surprising to me.
It's yeah. I mean, there's a couple of things you could extrapolate from that, which I mean, it's a whole nother conversation, but it's super interesting. Real quick, I would like to say too, if you switch this to the TitanX, the wrapped ETH version of the chart instead of the USD price,
I don't know how to do that on Dex tools. I know how to do it on Dex.
Maybe there isn't. Maybe there isn't a way to do that on.
Well, I know how to go to Dex.
Oh yeah, there we go.
Imagine that.
So I really want to hammer this home for all you guys that are watching right now and are really starting to grasp this. Is the USD price is fantastic, but if you want to actually see what's happening, go to the ratio chart, which as you can see, you go to dexscreener.com, you find your favorite chart, and then you go to, see where it says USD / whatever the other pair is. You click on that button, and it's going to bring you to the ratio, right? And what this is going to show you is if TitanX, in this case, is increasing, staying the same, or decreasing in value relative to ETH. And so what you can see is this will tell you, are we going up in USD price because of liquidity bonding, meaning ETH is going up and it's dragging us up because the thing is going sideways on this chart, but the USD price is going up? Are we going down relative to ETH? What's happening here? This is actually going to tell you why the USD price is moving. And then when you combine this with your understanding of liquidity, like, man, you will really start to get the full picture of this. So I want to really harp on the ratio chart here, not the USD chart, for gaining your understanding of why the price is moving. That's the only thing I can think of to add to what you've just said as well.
Yeah. And we're seeing a stair step right now. I mean, it's step 1, step 2, step 3 is coming up here. It's obviously going to consolidate and trade sideways or pull back a little bit. That's inevitable. These things always happen. But basically, since the beginning of August, if you had swapped all of your ETH to TitanX, you would be up significantly against the value of that ETH.
Mm-hmm.
ETH hasn't moved much. TitanX has. TitanX is what, up almost 10x from its bottom?
It's getting there, man. It's crazy.
That's incredible.
Oh, I know. That being said, though, I think that this is a perfect place to kind of cut ourselves off here and not go another hour, because I mean, yeah, it's gonna be super easy to keep going if we're not careful here. So
yeah, we need to just cut it off. It's the bull market. Ain't nobody got time to listen to a 2-hour stream.
Exactly. And don't worry, guys, we will come back with more content like this where we're talking about liquidity. So if you absolutely adored this stream, you loved it, you learned something, please go ahead and subscribe to our channels. Make sure you're following us on X, and make sure you like and share this stream as well. So it helps us with the algorithm. It helps other people get educated and they learn about liquidity and everything we talked about today. But what
100%.
do you got, Jeff?
Well, nothing more than that. I mean, we're going to be doing this weekly. Tuesdays at the same time, so you can get pretty consistent and knowing where we're going to be. Conversations are going to be different every week. We're going to be bringing value. We're going to be bringing a little bit of hopium. We'll also be bringing healthy skepticism. But this is, this podcast stream is going to be your place to catch up on all things TitanX ecosystem and pTGC ecosystem. So if you like this, help it grow, share it, like it, comment on the videos once we're done here. Put your comments below the video, everything that can be done to increase the algorithm makes everybody win. So that's all I got to say today.
Sweet. And guys, if you want to see, possibly, we've heard maybe people asking for a second stream per week. If you are interested in that, we're not 100% sure if we want to do it yet, but if you do want to see us doing twice a week, drop some comments, let us know, and we will definitely consider it. Nothing for sure, but hey, we'll consider it here. So that's all I got. I just want to say thank you for everyone tuning in. We got 408 people that are currently tuned in. We got
Nice.
300 on Twitter, and we've got about 100 on YouTube, which is fantastic. So guys, gals, everyone watching, thank you for being here. I appreciate it. I hope you have a wonderful rest of your Tuesday, and we will catch you in the next one next week. Peace and have a great week.
Sweet. Thank you.